Yes, 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 yes. What's going on? Yes, 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 yes. In the opening of the book, The Science of Getting Rich says, the ownership of money and property comes as a result of doing things in a certain way. And those who do things in this certain way, whether on purpose or accidentally, get rich. While those who do not do things in a certain way, no matter how hard they work or how able they are, remain poor. This was a philosophical, we call it that. Let me see. I assume you can hear me on YouTube. All right. So, yeah, millionaire math is it, man. What's up, Diane? The ownership of money and property comes as a result of doing things in a certain way, and those who do things in this certain way, whether on purpose or accidentally, get rich, while those who do not do things in a certain way, no matter how hard they work or how able they are, remain poor. Now, that's not just talking money either, by the way. Let's back up to what we came here for. Sunday, for me, is about the charts, man. Coming to the charts. Every day, these markets open. They're going to open with you. They're going to open without you. They're going to open. And over time, they go higher. Housing prices go up. They come down. Oil prices go up. They come down. Technology allows some shit to be made cheaper. Price comes down. And then what? Drifts higher. All things are, the pressure of the universe is to push shit higher. You grow older. There are more people. It just grows on its own. And money flow's a name. There's actually an indicator called the money flow, but that's not what the money flow is. The money flow for me came about as I would watch these prices and these assets with no expectation of thinking I know where they're going, but I could just watch them and see what it is they were doing. And as I began to watch it, I would look and I'd say, okay. And I began to see just this pattern that would emerge on these charts. And charts are nothing complicated. If you've been around stocks for any length of time, usually when you get into like stuff like houses or commodity prices, if you're watching, they'll usually use a line. It's something as simple as a line. They'll be like, well, the price of a Ford last year was $37,000 for a Ford F-150. This year it's $39,500 for a Ford F-150. And next year it's $41,500 for an F-150, right? And it goes higher and higher. And then something could happen, bring it down. And then what? The march higher starts again. The pressure is higher. And you'll see it. Now, in technical terms, if you were a chart nerd, you're looking at charts. A lot of my friends are chart nerds. Some of the best people on planet Earth. Quality assets want to go higher. And you'll see them. The pressures to take price from lower to higher. If you don't believe that, it's going to be very hard to buy things and then sell them to other people down the road if you don't think there's a natural pressure for the price to go higher. Right? It's inflation. Creeps higher. That's been in the news. You've seen it recently. Well, if we back up any chart, and this is so important. This is the Dow Jones Industrial Average right here. and it's at 34,725. Well, shit, it was just at 37,000. It's gone from 37,000 to 34,000 down, right? Is that unusual? No. Did it over here? Look, did it over here? Now, if you look at this price, what was that? 35,000, what? 500? There was a person who owned stocks over here, and this day was the highest balance they have ever had. From this day forward, every time this price goes below here, this person has a negative feeling toward it. Not every time, not every person. Now, when we got over here, is this higher than this? But on the way to get there, you had what? This. Now, this is how they all work. Go look at Amazon. Go look at name a company, man. Name something. Name a company. And what if we could take this basic idea? I mean, big picture, just back up, big picture. I put out these things called the 10 pillars of success when you buy a book from me. Pillar number 1, how you think is everything. Think success, not failure. Be aware of negative environment and negative people. It means control your brain, your thoughts. And so as I began to look at this, by acknowledging this, my name's Gerald. I'm an alcoholic. Through acknowledging it, what? I can do something about it. I can begin to use this price volatility to my advantage. And so if I see the S&P for the rest of my life, when I see the Dow Jones Industrial Average start to sell off, if I had a pattern or a way of, and you say, well, what if that's not the bottom? Okay, I'll buy the next one. And I just went forward through life with the idea that I'm looking to buy shit cheaper and sell it higher, and believing that over time there's this inflationary pressure that pushes up Apple. You think Apple will never go any higher? Not true. It's been going higher for a long time, with periodic moments of going down, right? So if we back up and you say, well, yeah, that's Apple, Gerald. All right, let's look at Pepsi. Let me show you my creative investing genius. Okay? Let's back it up. Let's go a decade so I don't look like I'm cheating. Now, you think during this decade anybody has pronounced the death of the economy, wars, the collapse of the currency, zombie apocalypse? This is the chart of Pepsi. This goes back to 1850, man. This game just of stocks, of quality companies. Now, inside of this inflationary pressure of more people being born and less stocks, you don't have to be a genius to realize if there are less companies and more people. So if there are less beach houses and people who want to buy them, the price goes up. The moment there are more sellers than people who want to buy them, the prices go down, right? But over time, there are more people. And more people need to retire, and more money comes into the market. And these assets just get bought up, man. And they go higher and higher. And we could go back 100 years, and you'll still have people explain to you, hey, you don't want to do that, man. That's fucking risky. No, the risk is not owning stocks, man. The risk is not owning property. The risk is not being the owner of businesses that appreciate and produce cash flow. That is the risk. The risk is not to participate. To be on the wrong side of the cash register is the risk. I remind myself of this every day. There are renters and there are landlords. And the landlord is getting rich every month. Richer than the person renting. Very simple. Think about that for a second. Something as simple as that, dude. Think about it. Think about it. So the guy that owns Pepsi, I got about 30 G's in this. He's getting richer every year. Tick, tick, tick. Oh, by the way, they pay dividends too. So while this thing goes up for a decade, periodically comes down, and not a little bit, dude. That's not a little drop. That is $155 to $100. That's a 50% drop, man. Or what is it, 35? That's big. Oh, look, did it over here too. What was that? 2015. You weren't even in the stock market. My point is, this game's being played out long before you got here. And the rules of the money flow, that inflationary pressures push prices higher, housing prices go higher, stocks, Apple will go higher, Amazon, Netflix, Chipotle's, they're going higher. And that is the very first principle of the money flow, without even showing you an indicator or a chart. Stock market goes up as much as 71% of the time. The problem is it's not a straight line. Price can only do one of three things: move up, move down, or move sideways. I believe price does this in 4 stages. By identifying the stage, we can better allocate our buys to take advantage of sell-offs, in other words, a stage 4 decline, and maximize price increases to take profits into stage 3s. So if I want to take money off the table, I do it on purpose into strength. And when it goes down, I'm not looking to be the seller, I'm looking to be the buyer. And as you go forward in life as a person who sells into strength, buys into weakness, and as you go forward through cycles and years, guess what happens? If you press and push your money. Now, if you don't press and push, and you don't put money in, no, it's not going up. And no, you're not going to get rich. But if you do, and you become the collector of money, the collector of appreciation, the collector of cash flow, it's just a change. It's just to decide, I want to be on this side and not that side. And that takes a fucking moment. And the reason is, it also takes years. The stock market goes through cycles, and it runs up and it runs down and it runs up and it runs down. And it doesn't give a fuck when you decided to start playing at all. And so if a guy decided to start playing right here, money flow rules apply. Prices go up. They move in 4 stages. They go sideways, they run up, they go sideways, they run down, and they go sideways. And we can see that pattern of price movement played out on charts. This is a daily chart of the Dow Jones Industrial Average. It went sideways, it began moving up. It went sideways, it began moving down. And it'll move through this pattern back and forth your entire life. It'll never stop. When you decide, I don't have money to play, it doesn't care. It goes into a stage 1, it goes up, and some people get fucking rich week after week, month after month, year after year, because they keep accumulating. And when other people are scared, they buy shit tons. And how can they do that? Because they do it on purpose, not accidentally. It's the reason they get up, man. So some people playing this game are way more dedicated than me or you, and it's all I think about. And that's the problem. So people stumble into this half-assed, don't know much, don't have any time in, haven't studied, haven't looked at 10,000 charts, haven't set them up, and guess what? It's going to eat you. It's going to play on your emotions. Trading's made up of 5 things. Psychology, your mindset. Pillar number 1 of the 10 pillars of success, how you think is everything. That's it. How you think about it. I used to say this phrase, what you think about comes about, what you focus on grows. Whatever you're obsessed with, whatever you sit around thinking about, whatever you want to do in your spare time. What is it that your brain sits on? That's you. That's you. Whatever you set it on, man. Market selection. Trading's made up of 5 things. 1, psychology. 2, market selection. 3, position sizing. 4, exits. 5 entries. That's what this is, man. Exits and entries. How short do you want to make the time frame? That's up to you. I have no expectation of knowing where the fuck it's going. I don't know if it's going up or going down. I have no idea. I do know this, though. If I buy a lot of downs when it goes up, I make a lot of money. Let me say it again for the kids in the back. If you buy a lot when it's low, when it goes higher, you make a lot of money. And you say, when's that happen? Don't know. Don't pretend to. There's people on YouTube that'll tell you when. I guess you can listen to them. I don't know. This is what I know. Prices go sideways. We call that stage 1 accumulation. You say, what do you mean? You can see it? Yep. You can see it on a chart. You can break it down. We could zoom in and you go, what is accumulation? Well, what is the definition of this word, accumulation? If I said, hey, I'm accumulating Pokemon cards, what do you think that means? If I said, hey, and they say, what do you like to collect? And I say $100 bills. You say, what do you mean? I like to keep them. Every time I get one, I put it in my safe. I've been doing it for 22 years. What do you think's in the safe? It ain't complicated, right? Accumulation means you're acquiring them. You're gathering them. That which gathers more gathers more. It's a universal principle. You want money? Have money. The secret to money is having money. Say, what do you mean? Meaning more attracts more. If you put your money into shit that goes up and produces dividends or appreciates over time and produces cash flow, guess what? You get more. And if you do that a lot, more gets more, which gets more. And so the moment you don't need something, if you were producing thousands in dividends from the stock market, you say, well, how could I do that? You would accumulate. And you would accumulate on stage 1s, and you would just do it your whole life. You would just accumulate assets. And you could do this even if you were a girl. Even if you were a minority, you could get up. Even if you were a poor white kid from the trailer park, you could get up, take your phone, and with your thumbs, begin to participate in this same game that Warren Buffett plays every day. Ray Dalio, Elon Musk, all of them. Their money is right here. And you can watch it. You can watch Warren Buffett's money go up and down. If you cared at all, you could watch his portfolio literally tick by fucking tick, day after day, waiting. And you say, what do you do? What are you doing, sir? I say, listen, every time Warren Buffett sells off and goes down and it drops 10, 15%, I have this little thing that lets me know when it's dropped too far. And you're like, what do you mean? It's this thing called the RSI. And it allows me to take a chart with inside of a pattern that price moves in 4 stages, but it has this inflationary pressure to push it higher and higher and higher and higher. And you say, well, that can't be true. Well, give me a stock. Let's go to fucking Walmart. That's not Pepsi. That doesn't have anything to do with computers or tweeting or NFTs. What does it have to do with anything? Is it possible that this could move in a pattern that's recognizable? Now, you might think I made the shit up. I could make you rich. And it ain't going to be because of a stock I told you to buy. It's going to be because of a way I told you to buy stocks. You could be completely fucking rich in 7 to 10 years if you got on this and focused on it and applied yourself. You're an engineer and you can see the price movement of stocks and you begin to take that mind of yours and read and research and study and find assets. Come on, man. You're sitting, come on. But do you have the discipline to accumulate when it's low? And you say, well, Gerald, sometimes I need money. Good. Sell it when it's high. As a general rule of life, accumulate low, sell into strength. So if I need money, that looks like a good place. Not here. If I want to make money, this looks like a good place. There's a philosophy. Now, what I figured out one day playing blackjack, I had been to 1 million seminars. I've read more books. I was obsessed with trading. I would order courses. I spent at least $10,000 on books. Most of you haven't spent shit. It's been handed to you. What I show people, I spent years and years ordering courses, going to seminars, and then I just hand it to people. Here. Just hand it to you, man. You understand, in any industry, doing anything, there are people, there's like, hey, let's make this skateboard better and better. And then you're handed a perfectly working great one. You don't even have to fucking create it. Here. That's our lives, man. There are people that their first phone is an iPhone 13. There's no question in the world that person wouldn't know. And you say, what do you mean? Google. How does atomic energy work? Well, atomic energy is based on Gerald when he's 9. Hey, Dad. My dad says, go get that Webster dictionary over there. Information moves slower. It's faster today, man. So you can watch these assets and they're going to move. And tomorrow when you take a day off, Walmart's going to print. Walmart's going to print and you may not watch it. You know what else is going to print? Bitcoin. Bitcoin eats people. You know what I mean? People come to Bitcoin, get sucked in, lose a shit ton of money, get scared and move out. Most of you. Most people don't have the stomach. I can show them 13 years of returns where this has made over 100% every fucking year of its life. And there's still people not invested in this. They still don't know the price is 38,003.63. I look at this shit every hour on the fucking hour that I'm awake. And you say, why? What you think about comes about. What you focus on grows. So the reason you don't have a lot of Bitcoins, you don't think about Bitcoin. Period. Whatever you put your mind on and focus on will accumulate and grow. And the guy says, well, I don't get dividends. I know. You don't think about them. You have everything. You have everything a human being could possibly need to prosper and grow fucking rich. You have been blessed. You've been handed a fucking iPhone with the internet and anything that you want. You just simply put your mind on, start thinking about, reading about, and take the slightest effort to push forward and it'll come to you. Anything you want. What haven't you gotten that you put your mind on? I mean, one thing. One thing that you didn't, if you did, you were thinking about all the time. You were investing your time, your talent, your effort. Time times amount times yield. The guy says, well, how do you, I can't afford a Bitcoin. No shit, you don't think about Bitcoin. It's not coming overnight, bro. It's because you start thinking about it, and then thinking about it, and then thinking about it, and time goes on. And you play through. Well, I don't have a lot of money. No shit, you're not thinking about accumulating a lot of money. The moment you are and begin to, that's it, and you begin to take action to do it. What? Stage ones. So as you begin to accumulate Bitcoin, take me back. Let's go back 13 fucking years. Find a year that this isn't true. Not one year. That if you're accumulating stage ones, you don't have a shit ton of money 1 year later. Go find 1 year on a Bitcoin chart. None. There isn't any. That works on Walmart too, Matt, by the way. Go find one, man. You might find some obscure, weird-ass penny stock that went bust. Sorry. There are levels of speculation. There are companies that are Walmart, and then there are companies that have one exploratory product that may or may not work. I don't know if that's going to survive. And if it does, you'll get 10, 15, 20 times your money. If you have the stomach to stay there. Let me let you in on something. You don't get biotech huge profits when you don't own the stock. By the way. If you didn't know. In other words, you don't get big gains if you're not the owner of the stock when it makes big moves. Right? Basic philosophy. So if we look at Bitcoin. You know what? Let's don't even talk about Bitcoin. Look at the SPY. The RSI. Man, I wish you cared about this, man. based on your question, talk about the difference between a breakout and something you just read my book. You need to relax. You need to ride some stages. Because inside of the moving average is just there to help you try to figure this out. And it's not perfect. And price can go fucking above it, and below it, above it, and below it, and above it, and below it. And it's not a breakout. It's a stage one. This line you see on this chart is the 20-day. This solid line is the 20-day moving average. And what it's trying to help you do is to see price. It's 20 trading days in a month, right? Monday, Tuesday, Wednesday, Thursday, Friday. That's 1 week, right? And if you look on these charts, you're going to see a red dotted line. That's 1 week, dot, 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 dot. So if we were to look at this just with an open eye and see what's in front of us, with an eyes to see, ears to hear, if we're looking at that day and it's what? Red. Where's it at? Is it below the red dotted line or above it? Below it. What does that mean? It means it's bearish. And if we look 20-day, 10-day, 5-day, what is this chart here? Should you buy it? No, it's going down. You wait. What are we looking for? A pattern of what? Accumulation. Accumulation is the stage one. So if a stock drops one day, someone's buying it, they're not doing the money flow. They're doing something, but it's not what I do. You're buying day one of a sell-off. How long does the sell-off last? I have no idea. Now, if you drop to a 5-minute fucking chart, guess what? It might last 50 minutes. You say, what do you mean? 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. These are 5-minute increments, and then it breaks out, runs up, right? And then what? Candle, 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 starts to roll, and the day closes. And one trading day on a 5-minute chart, well, probably 15-minute chart, it could run through this cycle. It's fractal. It's fractal. And so if you drop it to a 5, yeah, it's going pretty fast. But if you back up to a 1 day, this moved pretty damn slow. 1 day. Right? And then what happened the next day? Went lower, just as we thought. And what about the next day? Even lower? Why would we expect anything else? Here's what the money flow teaches. Wherever price has been before, it'll go again. And you get these things called support and resistance. A lot of people explain it a lot better. And price will move up, bang on it, move down, bang on it, move up, bang on it, move down, bang on it. When it's doing that, sometimes there's a 20-day moving average. It's going to go above it, below it, above it, below it. Well, the eye can see and the ear that can hear can see, whoa, look, it's building out a level. Meaning the pattern isn't working anymore. And it'll go into these long stage threes where just not shit's happening above it, below it, above it, below it. These are gray areas. Look at, and you start trying to make sense of something that doesn't make sense. Look at win right now. Look at win. Now, this just comes with fucking time. I don't know how to get you to see this when you're looking at a chart, right? But what you have right here is not a money flow pattern. Now, you could say these are tiny ones. Look. And you're going to see this all the time. And then you got to figure it out. What am I doing here? This is what's going to churn you if you're a short-term trader trying to use stop losses. It starts to break out. The guy says, Gerald, it didn't break out like it was a mistake. No, man, it's gone into a giant stage one accumulation. Just going sideways. Up, down, up, down, up, down. And you're trying to make it do something around a moving average that's broken. The pattern's broken. It's not doing it anymore. It doesn't go back into effect till it clears this or this. And these are dangerous because the move is so wide, 92 to fucking 80. That's a $12 whip range, man. Look at this. The only guy playing this, if you're looking at this on a daily chart and you back up to a 1 hour, what do you bet this gets spread out a little bit? All right, let's back it up. Now, I don't play in this field anymore, but I used to. I would look for these. Now, let me take you back. Oh, you guys don't. Now, if you get this, you're going to go money flow 2.0, okay? I don't teach this a lot because it confuses new people. Look, the pattern's broken. Man, I wish you understood this. The pattern is broken. And it stopped what? Just like we say, where prices stopped before. Because of this belief, there's our anchor point, right? Anchor point. And then what? Anchor point, anchor point, anchor point, anchor point, anchor point, anchor point. And now what? We can create market structure. It's not doing the pattern, man. It's not doing it. It's stuck. A 3 is a 1. The only reason we call it a 1 is it's coming down. And the reason we call it a 3 is it went up. Prices can only do one of 3 things. But while they're doing those 3 things, there's a general pressure to go higher and higher and higher. I don't know if you know this, but housing prices are going up. And you're like, yeah, but I'm waiting for it to come down. Okay. And even if it comes down, it's still going up. Your insurance is going higher. You will pay more for gas. It's going higher. Telephone bill, Roku bill, Walmart, guess what else? Stock prices. As prices at the store go higher, multiples expand. The price of stocks go higher. These are inflationary assets. Land, stocks, businesses, valuations go higher. You say, what if it doesn't? That's the inherent risk in investing. The risk is some shit blows out. The risk is some companies have bad management. The risk is technology may wipe you out. The government could pass laws that go against coal. One day you're profitable. You own a coal company. They pay a dividend. And then one day a president says no more. I want that dirty shit out of here. And they begin to attack you. Or you own a crypto DeFi coin. Oh, you didn't know the government can shut you down? That's the risk. You want to be an investor? Oh, you wanted to when it was fucking easy. See, most people want to be an investor, have no idea what you're saying. Because the moment it gets tough or hard, it doesn't look fucking easy, they complain. And they want out of the deal. Don't know that is most people. Talk. All right. Everybody wants to talk about Ford now. Look at this. If you believe what I'm talking about, when you're watching Ford fall from historic lows and you got a few bucks in your pocket, you might not have any bucks in your pocket. And we're waiting and price starts to go sideways. After a big fall. And you say, Gerald, but what? Down, then sideways. Down, and then what? Sideways. And then what? Down, and then... Now this is on a weekly chart. Down, that's a pretty big down. That's like 8 weeks down. What was it? From 17 to 12. Better take your profits and run. Better take them and run, right? But the guy that held it over here, when it fell to here, does he see this possibility? I hope you do. This volatility, shit getting out of whack, is what allows you to multiply, to beat standard compounding, is what I'm saying. Do you get what I'm saying? But you don't get to do that if you don't own it. Now, I know some of you are obsessed with the idea that you're going to move in and out and 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 in and out. And you're going to do this your whole fucking life and you're going to get it right. And you're going to beat compounding through your wit or through your ability to click a button real fast. That you're going to create a chessboard so big that you're going to run that into millions of dollars using your intellect. Maybe. I know a lot of people done that. Too. I know a lot of people collect dividends. I know a lot of people got rich just buying houses. I know a lot of stock millionaires. Look at this support right here. This is what we're talking about whenever you hear him talk about support and resistance. Now, this is art more than science. These indicators, the 20 and the RSI, they're just there to help us make sense of what we're seeing. They're not there to counter out each other, but to help each other interpret. So when this price bumps and this RSI, pull it up, goes green, I know as long as this is in the green, you're at risk of a price reversal. Does that mean you need to do something? Not necessarily. If you're a trader, it does. If your goal is to get money out of here, to get it in and get it out, you better be thinking about getting it out. Why? Because when that happens is when it stops going up. Now, always and forever? No. And sometimes it just stays green and it runs and runs and runs. And that's what you saw right here. So as a general rule, if you have a trading strategy, for me as a swing trader, a lot of times you might miss this. See, if you're day trading, and nothing on day trading, but we just have to say this, you don't get to buy here and sell here. That will never happen in one day. I mean, not for Ford. I'm sure it happened with plenty of other stocks. But to buy it at 12 and sell it at 19, right? Who's going to do that? The only guy I know who can do that is a position trader. I don't know what else you'd call it. You say, well, swing trader. Yeah, okay, maybe. But I don't know what your rules are for exiting. You know? So when you put together a strategy, whether it's mine or any other, maybe build in a couple rules that would allow you to ride something like this. Meaning you wouldn't get out of the trade, you'd stay with the trade. Even though this went green, even though you hit your target, you somehow have a built-in rule to ride some of this for the position all the way up. That's with money flow. Once you learn to read the 4 stages, if you're on a booming stage 2, there's no reason to get out. This is your friend. And you say, but what if it pulls back? Don't matter. It's still your friend. Just because she didn't kiss me yesterday don't mean she won't kiss me today. This is the breakout. Just because a couple of them failed, boo fucking who, this is a breakout. Well, it pulled back. All right. You don't think it's ever going to do a stage 2 again? If you don't think that, then I don't know what you're doing. Everything I trade, buy, or invest in, I believe that over time goes higher. If I didn't believe that, I wouldn't buy, trade it, or exchange in it. Why would I do that? I'm not trying to lose my money. I'm trying to grow my money. Yeah, in periods of time, things that I own might go down. Right? Did the growth prospects change? Are there less people using Uber? Yes or no? No. Then what? Then we know that over time, we're going to be all right. Right? A lot of stocks sold off because of COVID at first that what? Shit, prospered under COVID. They came the go-to stock. Home Depot, right? Peloton, Zoom, right? Prospered. Now look at them. They got more people using them and the stock price is lower. You say, what do you mean? There's irrationality at times. At times. Is Ford a good buy here? Is it a good buy here? Or what about over here? Is it a good buy there? Is this a good buy? But see, it was coming down. You tell me, was it a good buy there? You say, well, yeah, it looks like it was. Was it? All right. What about here? Is it a good buy here? You say, yeah. What if it goes to 14? Is it still a good buy? Well, no, that kind of sucked. Really? Well, what if it then runs to 28? Is it a good buy then? I mean, how the fuck are you making this decision? It's based on when you started playing. So you came into the stock market a year ago. You get year ago prices. And that's where we are. And that's where the game starts. So if you bought a house today, you can't look and say, well, in 2008, man, this fucking thing was 90,000. Yeah, you weren't playing then. You're playing today. These are your prices now. Right? And then you have to go, okay, well, it's $19, but is that cheap? Is there a reason? Is there a catalyst that would take this higher? Should I invest in this or should I just trade this? Should I just trade it? And you say, well, how can you make that decision? Well, if a stock is undervalued by, say, 40%, and let's say Ford's trading down here at $12, and they say, look, this stock's worth $19, man. Would you want to buy more there, or when a stock comes and it's at $19 and they say, look, it's worth $24? Meaning it's this close from true value. Or if it's this close for true value, might it affect the way you trade it, how long you hold it, the size of your position? Meaning the guy playing over here is primarily playing momentum. We're just doing it because we think it's a good company, probably trade at a premium. Yeah, it still have some upside. We could play in this. There's a little game here. That's different than it's 40, 50 fucking percent undervalued. If I get a little bump here, good. I might trim the position, let it come in. Shit, I might put it back on to let it run up. You don't get to play that game when you're a day trader, when you're a swing trader, when you're in and out because of the news. You don't get to play that game. Buying 1,000 of Ford, downsizing it, letting it come in, adding them back on, putting it up, and playing it for year after fucking year after year after year after year after year. You going to do that? I see people with Roku for 6 months, fuck, man. I don't know how you'd have got rich in the tech. I don't know how you'd have got rich over the last 10 years with the way most people think about stocks. I don't know. I don't know how people would have played it. I don't know what you'd have done in 2002 when it was the one tech crash. That was my first one. Then 2008, a lot of people were butthurt this one. I don't know how you're going to go forward building wealth. I don't know how if other people like selling something makes you want to sell it. I don't know how you think you're going to prosper. The accumulators of assets and owners of businesses are the richest people on planet Earth. People who buy things and accumulate and multiply them are rich. And those people who don't are not, period. So go look at the people in your life and family that aren't. They're not wealthy. They don't have it. And go look. What is the commonality? They don't own anything. Nothing. People who start accumulating small, it grows. So sometimes what do you think I should do? I'm a single mom. You should be an owner of assets that produce cash flow and go up. Instead of being an owner of debts that cost you money and go down. If I can't get her... had a lady send me a thing. And if you're on here, I'm not picking on you. You have to understand this philosophical view. If you own debts that cost you money and go down in value, you own on a couch. Your couch is going to zero and you're paying interest. If you own a car, your car is going to zero and you pay interest, right? You rent. You have zero fucking equity buildup, right? Now we add a loan, another loan. Boom, okay? So you own 6 assets, none of them are yours, and they're all going down. Do the math on that, man. Versus a guy comes in, or lady, they're buying AT&T, they're buying Verizon, they're buying REITs, they own a home, they start buying into a syndication, they go, oh look, you can buy a parking lot. Like they start accumulating shit that pays them money and appreciates. They're buying Apple, right? They own Apple. What else they own? Look at Apple breaking out yesterday. This is one of the largest companies in the world. It's up 7% yesterday. Look at this thing, man. There's just no end to this thing, right? Look at Exxon. There's no end to it, man. You want to buy Exxon now? Everybody loves Exxon now, right? When should we have loved it? I'm trying to give you a life lesson. If you'll listen to what I'm saying, you'll get rich. If you fucking went broke trying to buy Exxon, if you put half as much effort into buying Exxon as you did your truck or car, where would you be today? Look at this simple switch. Now, it's not as easy as that, but you need to see that visually. Me too. I mean, that's what I'm saying. We all are applied to these rules. And you say, even single moms? Sorry, yes. Well, what about if I was poor and rich? You too. And hillbillies. Everybody on planet Earth is subject to this money game. Nobody gives a shit. Politicians are not going to help you. Nobody cares why you're in your situation. I'm just telling you the fucking truth. If you own shit that goes down and that costs you money and depreciates and you pay interest on it, and you don't own things that go up, that pay you money, that pay you interest, that pay you rent, that pay you dividends, you will be broke. You say, how do I fix my situation? Until you understand that, I can't fix your situation. And most people will never understand what I just said. Do we want to buy Exxon here? News would have you think so. No. You fuck what Goldman Sachs says. Why? It's not on sale. See that RSI? It's extreme. This should take no thought, no effort on your part. You own this asset, there's nothing to do. You would not buy it here. Are you out of your damn mind? If we go look at what is the value, see how easy this makes this in oil investing? You say, are you an oil investor? Yeah, I have about $65,000 invested in oil. But what if it goes down? Good. Every time it does, I get richer. What is the value of this? What is my upside? 3%. There is no fucking upside. So what do I need this to do? Go down. I need this to happen. I would tell people, don't buy IPOs, dummy. Why? You buy this, not this. This. Never buy IPOs. But they suck them in, man. Every new person that comes in the market just sucked into the IPO pool. Oh, I got to get some of that. Every one of them, I promise you, every stock on planet Earth does this at some point, allowing you to get in at a better and a cheaper price due to the nature of the volatility of prices, of the irrationality of the stock market, of fear and greed. I don't care what stock it is, what NFT it is, what fucking commodity it is, they go up and down. And you want to be a buyer after they go down, even if it's not them going very far. This is Apple or this is Exxon. So is there a difference between how much would you want to invest in Exxon today when the upside is 3% versus if when we look, the upside is 50%? Well, Warren Buffett said, be greedy when other people are fearful. Fearful would be what? Prices are way below the value. And this goes what? That's a greed meter, man. That's greed. Look at these greedy bastards. The people buying here are greedy. Greedy people. That's what this tells you. You've got to understand this. This is the indicator of fear and greed. These people have run it up too far, too fast. They're paying an unreasonable price. They are greedy people. Let that sink in. The people down here are scared. They've sold it too far. Whoever's selling when the RSI is 30 is ridiculous, using total fear, not logic. Almost always, whatever stock it is below value. They are willing to sell an asset below its value because they value the money more than the asset right then. So instead of seeing it as an opportunity, they see it as a reason to leave. And some people will spend their whole stock trading career locked in that because they can't make sense of an anchor point anchor point, stage 1, stage 2 breakout, price runs up. Oh, we got stage 3. Look at that support. Now we got stage 4 decline. Whoa, it's not declining very much. Is there a logical reason that price could continue? Yeah, price is still undervalued by about 15%. Oil's moving up. Boom, there's the breakout. What? Swing trader jumps in. If you're a position trader, what? You probably bought some, maybe took some down. What? Put some back on. Now it's running up. What? You're taking some down. You don't give a fuck if it's 70, 50, 40, 30, 20, or 10. That is the hardest part for everybody to understand. The money flow is about different assets in different sectors. There's 5 principles to trading. Psychology. If you don't believe anything I just said, if you don't believe that over time assets go up, you cannot trade this strategy. The money flow trading system is about acquiring assets and that believing over time assets that produce cash flow, grow revenues, will drift higher. Uber will go higher and higher and higher, but it will do it without you probably. Or maybe not. What do we think Uber is worth? $68. None of your friends know this. You don't have one friend that walks around thinking, fuck, dude, Uber is worth $68. They want to talk about baseball, fucking the Kardashians. They don't know anything about Uber. You know how much time you spend with people that aren't thinking about Uber right now? That they could buy at one of the great new American companies. Hasn't been around that long. Go look at Chipotle's. Go look at Microsoft, Intel. Go look at their early days, the first 5, 6, 7 years. What? It's volatile. What? Price does the money flow. Long before you got here, long before you bought my book, long before you decided to even look at this shit, it was doing this. Price would run up, hit a stage 3, go sideways, come down, long before you were here. And look, does that not look like that? What do you think it's going to do? More people are using Uber today than they were back here. More. There are more customers. So what is happening? Why is this going down? Has nothing to do with Uber. Interest rates. This is a growth stock. It's on the wrong side of the interest rate spectrum. Good. That's how I get rich. Let me say it again. Good. Let's say these guys here stupid. He's dumb shit. I know. He went to Harvard Business School, has a degree in finance. I know. Your brother knows better. Come down here. Uncle Larry knows way more than Mark Manning. He's got a fucking PhD in finance from Wharton Business School. Got a what does this guy know? He doesn't know shit. His only average return is 26%, 62% success rate. What's he know? Your Uncle Larry knows more, right? Maybe the guy on CNBC knows more. Does he? I don't know. Maybe there's some idiot on Reddit. He knows more. Right? Or I believe price moves through 4 stages. And if I can go read, and you know what? I got in an Uber the other day. That's how much, this is my highest conviction trade right now. It don't have to be yours. Don't let my enthusiasm, because you may not have my stomach, man. They can take it to $1. I don't give a fuck. Now, you can't have that conviction, right? In Ford and ride it from $4 to $5 unless you have that. And there are plenty of people who tell you that my conviction is foolish. That's stupid. Don't do that. If it's going down, get out. Preserve your capital. Set it aside, right? Okay. Do that. It shows you how to do that too. Look, that's where you sell. Get out. Not down here. Up here. Enter, profit, take, get out. You don't need your handhold. Do that. If you think you can do it, do it. Do it consistently every fucking day. And on the day you don't feel like looking and your wife's like, do this, you do this. And when your boss is bitching at you, do this. Right? And your tooth hurts, you do this. Every day. Start shortening that window. Watch what you'll start fucking melting down. You got to find the time frame. Now, maybe not. Maybe not. Maybe not. My friend, the day trade professor, he likes it daily, in and out. I'm out. going to bed, all my money. We're playing a different game. We're both using support and resistance. We're both looking for setups, right? But I believe Uber's going to $68, dude. I really don't care what anybody else thinks. I know where it's going. I've looked at the books. 90 million people use it. They raise it $1, it's $1 billion fucking dollars. Like, the money's there. They just got to figure it out. Now, that's not the only company. That's an example. So as I go through allocating money, and let's say I decided to play the game on Ford. I'm a young man. I just got in right here. All right. Was it on sale? What do they think Ford's worth? $23. Shit. That wasn't bad, right? It was below value. Cool. If I'm a trader, what? I'm in. What? I'm getting up. I'm getting out. Right? What if I'm building a position? You say, what do you mean? Man, I like Ford. I think they're going to raise it in the future. I think this bitch is going to $30. I think they're getting into EV cars and that's going to blah, blah. And you begin to work it and you say, what's your plan? I said, I'm going to let this thing come down. You say, what do you mean? You say, psh, man, if I can get this at like 17 on the stage 1, I'm going to start buying. In the meantime, I'm going to hold in case it goes higher. And I'm a strategic buyer. And as it comes down, I'm looking for stage 1s to buy, to accumulate. Why? So that I can sell it for a lot up here. That might be next year. Fuck, I don't know. I don't know when that is. When does it need to be good to make you feel good? Or the market pressures make you feel sad. Oh, Gerald, the market's going down and I don't like the way it makes me feel. I only like the market when it goes up. I will only show up in your chat room on the days that it's green. Because the red days make me feel bad. All right. You do that. Because the day that made people the most money in Ford, the day they should have been the most excited, the day they should have bought the most, was right there. But I don't want to check the market on that day because prices went down real far. I feel real bad. All my money was in there. Okay. I was down 50%, and it really, really, really hurt my feelings. All right. I understand. I get it. I get it. And one time back over here, price was $12, and it fell all the way to $6. Fell 50%, and I felt real bad. I know. And then it started to go up, came back down, and made me feel even worse, Gerald. Makes me feel bad. I know, man. Maybe we could do a one-on-one, and I could hold your hand and rub it. Just rub it. Say, it'll be okay, Tommy. Tommy, you got to believe that over time, stocks go up 71% of the time. And you say, but Gerald, I got in 2011. It's 2013. That's just not happening. And it just keeps going down. And it started to go back up. And I bought more on the stage 1. Then it came back down again. I don't think your system works. It's been 2 years, Gerald. I know. But believe me, over time, prices go up. Down it went. Then what? Started to go up. And then where did it stop? Well, money flow. Listen, money flow don't care what day you got on the train. One day, I had people join my group at the highest high of the highest day of the price, and it's been straight fucking down since. And they're like, fuck this guy. He has no idea what he's talking about. I know. That's when you got on the train. And there were other people that got on the train on the lowest low of the COVID crash. At the very fucking bottom, they go, I want to try this stock thing. And I said, good. These are stage 1s. Now, they missed the last stage 1 that was a little higher. And they missed the one up here that was a little higher. They're catching this one. They just get on the train. And they start going. He says, Gerald, I'm going to tell everyone I know about you, man. I made a fucking fortune. And I said, I know. And that guy over there, he quit. He stopped playing. Why? Because his account went down. For a whole year, year and a half, price went down. And it made him feel real bad. So he quit. And we could take this back fucking cycle after fucking cycle after fucking cycle after cycle. That's how stocks move. They run up, they go sideways, and they run down. And one day, you got on the train. And you may have got on a train 3 months before a high. And stocks ran up. And then they were like, all my stocks are down, Gerald. They've all come down. And I go, I know. That's happened to other people in the stock market. Like all the time. Let's look at gold. I know. Joe, that's very mean to make fun of my sensibilities. It's very mean of you. I know. Boo fucking who. Now watch this. Gold is a commodity. Okay? Commodities work a little different. But they still move in the stage cycle. Okay? And we can still draw our points, our anchor points, our pivot points, and we can begin to see price. See? Move sideways, come down, right? Start to go sideways, right? Then what? Start to go up, right? Starts to go up. And where do we think it's probably going to go? Probably going to stop where it stopped before. Well, let's see if that's true. Holy Jesus, Gerald can read the future. No. I just know how price moves. Now, this is on a monthly. And as we take it down from a monthly to a weekly, the pattern expands. Right? What looks like a sort of a small move here gets, it looks different, right? So as we take the time down on a gold chart, notice what you see right now in the weekly on this moving average. This is money flow 2.0. I can't teach you to spot this fast. And you won't catch it right away because that was technically a breakout right now. This is a weekly chart, so it's a little expanded, but that's a breakout. And then it came back. And a guy might say, well, that failed. Yeah, but watch what happens. It's now trapped. It doesn't become a stage 4 decline, but it doesn't become a stage 2 breakout. What is this? It's accumulation. So as I'm watching the chart, what was a stage 1 or what was a stage 3 has now turned into accumulation. Do we know which way it's going to go? Up. Oh, just a sec. All right. Stop playing that shit. Stop playing that shit. Instagram. We got 194 people on YouTube, 170 on Instagram. I appreciate you guys coming. I know a lot of you are in the choir. Meaning, you know what's up. I got friends. I got some friends. They're really into the stock market. I got some that work on Wall Street and, some of these firms. And they got restrictions on them on how they can trade or what they can talk about. And that's cool. That's, even they don't know what's going to happen. And, I don't know, you watch fucking that show Billions, Axe Capital. I'm sure that stuff's going on all the time. We can see that on charts. What charts offer us as people is one of my greatest possessions. I don't think I know where stocks are going. I do know what breakouts look like, and I know what it looks like when it's going up, okay? And inside of all of that, there are some things that just become obvious, what we call support and resistance. So I'm constantly drawing these things. Let me show you what I'm constantly trying to do. And for me, most of your money is going to come through your job or your business. And what stocks allow us to do is to put that money to work someplace and actually have some sort of visual. This is just the fear and greed, the energy of people and, the market. The market's not efficient, guys. The market runs up, market runs down, market runs up, market runs down. You never get to keep the highest balance, meaning when you die, your account will probably be lower than where it was some other time. The chances of you dying on a green day, I hope I do. You never even thought about that, do you? When I die, I hope we're up like 1,000 points. My account's the highest balance it's ever been, right? But guess what? I don't get it. They don't give it to me. That's fucked up. That's fucked up, right? Somebody else is going to get it. You've traded this shit your whole life. You got it to the very highest. You drop dead that day. They give it to somebody else. And they're going to fuck it up. Because they haven't sat looking at charts. Nobody around me knows this, man. So as I'm watching this right here, if I'm looking at this, if you said, Gerald, what do you think about Ford? I'm in Ford, by the way. I got 750 shares of Ford. The last shares I bought were at like $6. I should have bought these, but I swear to God, I thought it was overvalued down here. I was wrong. I own it. I was wrong, and I own it, and I still made money, even though I didn't press it. I could have pressed it. Look, you say, why didn't you press here? I had 1,000 shares. Fuck, And then look, my 1,000 shares go to 25 grand, right? Come on, man. And in this cycle, if you are so blessed to be on the right side, if you're coming at this with the right mindset and you're playing the 5 to 7 year game, I think if you're playing anything else inside of Bitcoin, you're crazy. If you back your window up to 5 to 7 years, and what I'm saying in 5 to 7 years, we'll reevaluate. Meaning, let's say in 5 to 7 years, you've been banging these stage ones. If we're wrong and Bitcoin goes to zero, I think we're going to know sooner than the next 5 to 7 years. I think that's coming sooner. If it stays and it's still around 5 to 7 years and they've done legislation and things go well and history repeats itself, now the government will tell you that past performance is not indicative of future results. Is it? I don't know. That's all I have to go on, baby. Shit, all I know is they paid me rent last month, so I assume if I buy another property, they'll pay me rent next month. You guys said to me, Gerald, what do you think about the housing prices? And I said, here, listen, they paid me rent last month. If I can find a deal and the rent price that time is higher than the cost of the deal, I'm going to do the deal. I just need the deal to work. And you say, but what if you got a lower rent? That's happened to me. You say, what do you mean? I bought a house. Within the year, rent started coming down. And I went from being up $180 to being even. You're not even, you're losing. If you're even in real estate, you're losing. Right? You got to be cash flow positive or you're going backwards. And that can happen. Well, guess what happens over the next 5 to 7 years? Economy changes. Here's the funny thing. The house appreciated, but the rent didn't. And then all of a sudden, the rent started catching up. And guess what happened during that 5 to 7? The loans paid down. And all of a sudden, now you got an asset that is cash flowing. The loan's been paid down, right? And there's a bunch of equity in there. There's $50,000, $60,000, $70,000. You can just pull out tax-free. What could you do with that? Another deal. But see, you got to have deals to be able to do those kind of deals, right? So in order to get Ford at $4, you got to own Ford, man, or at least see the value of it at $4. And so as we look, like right now, here's another example, and this is totally different. Cloud Play, Iron Mountain, right? Iron Mountain. Where did we start buying this? I don't want to lie to you. Hold on, I'm going to pull it up. You say, what do you mean, Joe? Let's play the money flow game on Iron Mountain. Cloud Play, a REIT. Let's see. Dude, I got to get some money in my SEP IRA. Hold on, let's see. Iron Mountain. All right, 11/17 of 20. All right. We paid $27, it says. Oh, over in here. So we were buying here. Now look, it's come way up, right? Is this a deal? Well, if you're not in the stock, you're not. This isn't your decision, right? Like this don't matter. It don't matter that it was here one time when you're looking at it, and now it's here, right? This is the price that's being offered to you, right? You don't get to go backwards. To a guy that bought some here, he's going to see this price differently than you would see it. Fuck, man. Last time I bought it was 25. Now it's 45. If it goes to 90, is 45 a good deal? So think of this. This guy, this is funny. This guy buys me, right? What? Doubles his money. What if this guy buys and this thing goes to 90? What's up? He doubles his money. Now, if this guy didn't buy here because he once bought here, he doesn't get to what? Double this money. I just blew some people's minds. The cycle keeps happening is what I'm trying to say. So the money flows an everyday game, meaning it doesn't matter where I bought it once before. This is the price that it's being offered at. And if you don't like that price, don't participate. But some people will like the price. So I just paid $315,000 for an oceanside condo. The front deck looks at the ocean. I'm from the trailer park. Which one do you think costs more? Right. 10 years ago, which one do you think costs more? When my dad was a kid, do you think it costs more for an oceanside house or a trailer? To each group and each generation, the price is more. And it costs more. You're getting on the train now. That makes sense? So you could say, I don't want to pay $315,000 for an oceanside house. Okay, you don't get one. That's it. You can say, well, I'm going to wait till they're cheaper. Okay, me too. I mean, I might have one now and I might have one then. What's the lack and limit come from? And if you're looking at previous prices to determine future prices, that has nothing to do with it. Prices go up because people are buying it, right? They go up because there's more sales. They go up because revenue's expanded. They go up because the company's grown. Uber's gotten bigger and the prices come down lower. That's good for me. If I'm playing a 5 to 7 year cycle, how much money could I make in Uber? What are we doing? You're doing it as a swing trade? Oh, all right. Okay. Do that. I'm trying to get rich, man. So as I watch this here, I'm talking about on Uber. That's what I'm saying there. I'm not talking trading when I'm talking about this right now. You can use this for trading. Shrink the time frame. Yeah, you're going to get whipsawed. And yeah, the prices will break out and turn around. No shit. If it was just perfect and it would just roll up, everybody'd be rich. You only got to get it right 3 times in a row to be a billionaire. You say, what do you mean? Let's say I know for fucking fact this is going to $53. I've got almost $1 million. Well, it was $1 million, a little bit under now, in the stock market. I could sell all of it and put all of $1 million into IRM. Matter of fact, 100,000 of it, I go buy call options, maybe some leaps, and I create this synthetic trade. And if it goes to 53, I turn $1 million into $6 million. Or $2 million. All right. Then we go do it again. We only got to do it a couple more times. I got $100 million. So when people talk with certainty, don't forgive me if I call bullshit. If you knew 3 fucking times what was going to happen, you'd be a billionaire. Yes or no? You know what to do with it, but you say, well, no, nobody do that. No kidding, because they don't know. They don't know. So that guy you're watching, he doesn't know. I don't know. But here's what I know. Where prices have been before, they tend to stop again, right? Look at this happening here. And when they break one level, they go to the next level. So, in other words, when this goes up, it's probably going to stop where it stopped before. See that little box in there? So price will run up and stop right here. And if it breaks that one, which one's it going to? Right up here. It'll go to the next one, right? And that's the same to the upside as to the downside. That's what this is. That's what the pattern is. And what helps us determine that is the moving average, the 20-day moving average. That's that green line you see right here. Now, this is a stage 1 buy. What is the value of this company? I like this stock too, man. It was dirt cheap when I was buying it. You stay with me, I'll get you buying all the dirty ones. People be like, fuck, dude, why would you buy that? Why the fuck would you buy Exxon at $28? Don't you know everybody's going solar and everybody's going to have an electric car and millennials are never going to invest in oil products. Those things are bad for Mother Nature. Don't you know that, Gerald? And I go read and I'm thinking, fuck, dude, half the world's barely on oil. They're just going to roll up and now they got electric. Everybody in Africa is going to have electric. In China, really, nobody's going to burn oil just because it's fucking easier. Like, come on, man. All right, we got to stop being that silly, right? So, right now, this stock is undervalued by 14%. Is that cheap? Nah. It's undervalued. I'd trade it. Would I nibble? I might nibble. Is this a big setup for me? Nah. I own some. Am I a seller here? Nah. If I wanted to improve my position size, I'd do it here, but I understand I'm probably going to get it cheaper in the future. 14% is not a big discount. I mean, let's be real. But I'd buy some. And then, based on everything I just said, you had a thesis for why it could trade at a premium, meaning they'll let some stocks trade at a premium. They'll go overvalue 10, 20, 30, 40, 50 fucking percent. And if you can see a reason for that, then sure, man. Some, like Tesla, runs at a premium. You don't use this on Tesla. It runs at a premium. Shop, Roku. Why? These are growth stocks. Roku's taking a run to be the portal for internet television watching. You understand that, right? And then a stock like Fubo, well, these guys are the cloud, right? They're helping people. But if we look at a stock like Fubo, right? What is Fubo? Fubo. This is a television channel. You can buy this for $9, dude. People were paying $34 fucking dollars. Not long ago, this is a legitimate business. Go open your Roku app. Go open your Amazon app. Go open up your thing, right? These guys have a television channel. Now look at this price. But do you have the cojones? Imagine if you got your buckets right and you got money, and the rest of your life, every time the market went into free fall and panic, you just started fucking buying shit with the intention of selling it 5-7 years later. Like a baller. Give me some of that. Give me some of that. With confidence, fucking swagger, watching that shit. They're like, oh, it might go down. Good. Take it down. Last time I checked, more people used Uber than they did last month. Take it down. I mean, remember, this was a great television play over here. $9. Oh my God. It could go from that to that in fucking 2 months, man. All it takes is people to get greedy again. You don't believe me? Look at AMC, GameStop. Complete fucking nonsense. And look how far it went. This market gets lit again. These are gone. But guess what? That might take a year. Guess what you could do in a year? You could get a lot of shares. What about Hood? What about Hood? If you got on the Hood train and you bought it for the very first fucking time, at the open on Friday, you're up like 10%. If you bought it over here, you're like, oh, I don't like this stock. This stock makes me feel bad. Right? This guy, he's like, man, I like this stock. What's the difference? That's all in your head. What's the difference? Is it undervalued here? Was it undervalued here? But I don't feel good, Gerald. I've watched my account balance go down. I know, but let's see, what is it worth? But Gerald, for 6 or 7 months, it's red and it hurts my feelings. They say $24. Why have they brought this down? You know why they brought this down? The economy's changed. They've lost subscribers. They had a hit to their business model. They had to borrow money, man. They got caught up in AMC, GameStop. They got caught up in some shit, bad press, bringing it down, less people using the app. People are moving off it. So if you think that stays that way and you think that people are not going to keep using it and they're not going to build out their wallet, and more people aren't going to use this. This is not a buyout. There's no value here. Then you don't play it. But at a certain point, there is value. They got $6 billion on their balance sheet, right? They have $6 billion. If you bought the company, you get the $6 billion. Now, what if you got that one wrong? What if the highest it ever is $24 and you bought it up here? That's the risk. Welcome to the big boy world. That's a risk. You go buy a mall, people might not rent it. You buy a trailer park, they might move out. You open a store, they might not come. Maybe COVID, they close down your restaurant. That's called fucking risk. There's risk associated with business, even if you're just doing business with your thumbs. Yeah. What if your entire life savings is in here? There are people that all of their money is in this business. They launched it, created it. I know for you, it's just some shit you watch on a screen that you click with a button. You don't actually, in your mind, see this as a real business with real families and real people, have birthdays and Christmases. Some people have to the tunes of hundreds of millions of dollars invested in this stock. You got people crying because they're down 600. There are some people that play this game to win. They play in a big, big, big fucking way every day. And some of them they get wrong. Let me let you in on a little thing called angel investing. Sometimes they get that wrong. And then some of them are Ford or Exxon, right? And some are not. Some go down. And some go down for a while only to get their shit together and then explode higher. Right? That's part of it too. And some part of it is just the overall business cycle and the interest rates and the Federal Reserve and things that are happening. So when you see an entire not just in the sector, entire portion of the U.S. economy is being disproportionately shit on due to the Federal Reserve or interest rates or technology changes or wars or viruses or whatever, at some point that becomes ridiculously cheap. Meaning it went too far. And the pendulum switches and the pendulum changes and oil goes from way up here, all from 150 to a 0. And then from 0 back to probably going to 100. You ever seen that little play? Do you know oil did that? Look at oil. Way down here. That's funny. Oil's been much higher. It's been much higher. And somebody bought it here. Somebody sold it there. And somebody bought it here. Somebody sold it there. And all these are is anchor points in the movement of price, right? Anchor point runs to anchor point, anchor point, anchor point, anchor point. As you start drawing the anchor points, what do you start to see? These zones, right? And it breaks it. Anchor point. That's not really enough for one. And what? We run up to here. Super bullish when it's back in the box, right? We talk about that. This is on a weekly or monthly chart. Back this up. Now look at oil right now. If you understand how the RSI works, look at oil right now. 68. Is it green? Nope. Look, green. Green, right? Green. So we know it can go straight up green, right? You can get up in there, getting green. It's not there yet. What does that tell you as a chartician? Chartician. I think I made that up. I'm going to start using that. Chartician. Listen up, charticians. What do you think that means? 26.72. It's got a little room yet, right? What about there? Right? So if we look here, it's there. Here's there. Now, that doesn't mean it's done going up, but it usually means the pressure, it's got to let that pressure off. That's all that's doing, letting it off. Now, it doesn't, this is a weekly chart. We don't really want to use this for it, but we do want to be observant that even though maybe on the daily it's overbought, is there room? Could it continue going higher? Has it done it before? Yes. So if I'm in it, I don't want to get out. Somebody says, well, I'm going to sell my Exxon and go buy some hood. Well, no, I wouldn't do that. Why? Because we want to ride the ups, man. We don't want to get out, but we do want to sell into that to take gains if that's your game plan. But then at a certain point, you just let it be. And there's people, sometimes they'll be bothered by it. They're like, well, what do I do with this stock? It just keeps going up. I'm like, nothing. You're like, what do I mean? I want the money. No, you don't. You want the asset. It's okay to own shit that's going up. Like, you don't have to ever sell Apple. You could just own some. That makes your decisions real easy. Like, I don't have any intention of selling Exxon. I trimmed some just because I had bought way more than I wanted. So you go, what do you mean? Well, I kind of trade around inside of my buy and hold, meaning I want to buy a little more than I want. So as it hits these targets, I can trim it and still have a solid position. And I'm okay if this goes from 75 back down to 59. Good. Why? It's paying me dividends. They raised their dividend. They're not lowering it. It goes down to 59. Good. So when I put it in here and I look, then what? Now new money I can start to allocate to what? This. Well, shit, if I play that game forward in the next 5 to 7 years, collecting dividends, adding on ones, riding the waves, get a bunch when it's low. When it runs up, trim a little off. Why? Shit, I might want to add that to Haynes Brands. Pays a nice dividend. right? Where's it? Well, if I look at that stock in my buy and hold, see how we went. We're not trading now. Now we're playing a big chess game. Well, shit, Hanesbrands is undervalued by 49%. Shit, if I could trim a couple stocks, 3 shares from Chevron, 2 from Exxon, a little bit off AT&T, and you say, well, that might go higher. I know, but look. Let's look at something real quick. What happened when it went green? As a general rule, if you want to take profits, that's your gay. Look, it's the opposite of this, right? These are the times you want to consider being a buyer. Now, we have rules with inside of this. I'm not talking about that. I'm just on my big picture. If you're looking at shit, where do I want to be a buyer? But Gerald, I felt real bad because I bought it at 25 and now it's come all the way down and I'm down 32%. My wife thinks I'm losing money. I'm losing money. All I've done since I met you is it went down, down, down. And I say, I know. You need these. Makes these a lot better, right? Why? There's new people coming in. And if we know that, and this game plays out, it runs on, goes down. Oh, well, it came back down. Is that a good buy? Or was that a good buy? Well, this guy up here, he didn't think it was a good buy. Hold on. Let me show you that again. This is so important. Come on, man. I hope you get this. Let me try to help you. Is this a good buy? It is if you think it's going here, right? Could it go there? What is the value of AT&T? So you just started playing today. $29, right? What is that? It's 15% higher. I don't know why my chart got weird there. $29. That's past our target. It means, and theoretically, we could swing trade. We're back above the 5. We put in a box, right? It's a stage 1. Is it broke out yet? No, price isn't above the 20. If it does break out, where's it likely to run to? Previous high. Where's that? Near true value. So that's a swing trade setup. But as an investor, does this look good? Maybe. If you want to get you want some of the dividend, I'd rather buy there than here. You never buy there. So if you're watching this stock and then this starts happening, what does that tell you? Well, look, according to money flow, it's going to sell off. All right, well, we're playing this chess game. We let it sell off. Comes down. When am I looking at buying? When it sets up on a stage 1. When do I want to trim it? Stage 3. When's that? Fuck, I don't know. How big you want to play it? How many cycles we doing? What if we bang this for 5 to 7 years? Buying stage 1s, ignoring all the bullshit, just buying stage 1s, compounding the dividend. You don't think in the next, 5, 7 years it might get a little run? And when it does, my position is large. What do? I sell some. What? Go buy a house. I don't know. The volatility is what's going to let you do that, guys. Got to understand that. Where is 5 components to trading or investing? And life is a trade, right? I'm doing this live event at my house in New Orleans, February 11th. Life is a trade. Trading involves 5 things. Psychology. We got to know the big picture. Philosophy. Right? What's the difference between buy and hold rentals and flipping a house? Big fucking difference. Okay? Totally different kind of property. Right? You ever look at apartments? Most of them are 800, 900, 1,100 square feet, most. You want an 1,800, that you're probably going to go get a house, right? There's reasons for that, right? Economy of scale. You earn more per square foot, right? As an investor. So what is all that? That's psychology. We got to know the psychology of the thing we're trading. There's a difference between AT&T and Uber. That's different. Market selection. What game are you playing? Market selection is going to be the type of stocks. So if you come over, you could go with, here's the S&P 500. That's a market. It's 500 largest stocks in America. Well, say you want to play this game. You want to trade on this. We don't buy the SPY. You could. You buy the UPRO. It's triple leveraged. What if you get stuck with it? All right, you're stuck with the S&P 500. Calm the fuck down. It's not that big a deal. So what if, as a general rule, I'm going to take my shots in the leverage game after big sell-offs? Why? When prices drop too far. You say, well, what if it goes down again? Good. Gives me a little more. I can stack it up. It ain't going to keep doing that. 71% of the time, prices go up. If I go back through history, and I know they say past performance isn't indicative of future results, but as I go look at charts all the way back to 1850, it goes sideways, runs up, goes sideways, runs down. I mean, that's what it does, man. So as I watch price doing that, going sideways, running up, going sideways, coming down, going sideways, running up, going sideways, coming down, going what? Sideways. And possibly what? Coming up. Well, that'd be from 58 to 74. What is the trade here? The U.S. market, the entire fucking stock market. This is a leveraged trade on the entire stock market. When's the best time to do that? After stage 4 declines and it puts in a box, right? Well, here's a stage 4 decline starting to put in a box. Well, what if it goes back to where it was? Do you think it's possible that the stock market could go back ever? Or is it over? Forever? It's over. Never. Never. Even though through all of history, it goes back to the previous high and then goes higher. Is this time different? Never will do it. See how stupid that sounds, right? Now, it's never done that ever in history, but it's going to do it this time. So what does that mean? That means whenever the market puts in a high and starts to go lower, someone's going to make money. That was the highest high. And what? We've been going down since. The lower this goes, the bigger the return when it comes back, just philosophically. Does that make sense? You say, well, there's all these structural problems and there's, still Omicron, there's fucking, there's supply chain issues and there's, Biden and this and that, and interest rates and Federal Reserve, and they're going to crash shit and fucking national debt keeps going higher and my cousin Larry and I'm always sad and I don't have enough money and, I'd rather finance a couch than worry about this. Maybe if I could buy a new car instead of buying this, Bitcoin or something. Like, I just want to buy things that go down in value, not things that go up, because maybe they won't go up. But we do know everything else that I buy does for 100% fucking certain go down, other than real estate, stocks, and business. Maybe some collectibles like watches and things. But everything else that I spend money on literally goes to fucking zero. And yet somehow I'm afraid to buy Bitcoin. Every dinner you will buy just is gone. You spend it, never comes back. Yeah, there's people afraid, well, it might go down. Yeah, but you make transactions that are 100 fucking percent certain it goes to zero every day, all day long, every day. Tomorrow you'll do them, Monday, Tuesday, Wednesday. You'll go out, hey, here's my money, give me something, it goes in the trash. You make that fucking exchange all day long, every day for years after years, week after fucking week, compounded on top of compound for the rest of your life. You'll be making that trade and nobody freaks out about that. People don't think of that. Tomorrow you will give money you never get back for shit that you throw away. That doesn't freak you out. So this, you should be able to approach with confidence. Confidence. And if not, you have to ask yourself, what's wrong with my thinking, man? Where am I at? Why am I cool buying plastic trinkets at Walmart that I throw away, but buying $20 in Bitcoin freaks me out? Why? Why? When you know that transaction is going to zero, that car I promise you is going to zero. Everything you have is going to zero, except for the stocks, the real estate, the property, the land, maybe businesses that are producing cash flows, fair paintings, collectible watches, maybe some collectibles that I don't quite understand. Maybe even if some NFTs are going higher. But everything else that you exchange for, food, fucking clothes, going out, all these things that we buy, electric, like we have to, I get it. Some of these things we have to participate in, but we're not getting back the money. Like I spend thousands and thousands a year on HOA fees and electric and insurance and all this shit that I don't use, and it just goes away and money just pours into there. And I don't get freaked out as I do about my shares of Hood coming down or Roku. That'll freak you out. Shares of Roku coming down. Fucking blowing all your money at Walmart. That doesn't freak anybody out. We got to ask ourselves about that. Man, we'll drop that on a fucking night party and put it in Roku, and they're like, oh my God, it came from here to here. I know. Relax. It's in a cycle. So here's what you do. Calm down. You start learning position sizing. You build a portfolio. You pick up a little on stage ones. And you wait. And guess what? It goes back. If you ever go look at the past of Chipotle's, stock's been trading 15 years now. You're going to see this. Go look at Tesla. Go look at Apple. Go look at the stocks that are 20, 30 years. Go look at the ones that are 50 years old. Go look at the ones that are 80 years old. Go look at the ones that are 120 years old. Coca-Cola. Ain't that many, but there are. Let's Google it. How many cycles do you think this has been through? How many stocks are over 100 years old? All right. New York Gas and Light is the oldest stock listed on the NYSE. I did not know that. That's funny. I trade this stock. Let's pull it up. ED. I'm in this stock. It's the oldest stock traded on the New York Stock Exchange. So let's back it up. Let's go to a weekly chart. Oh, this is kind of funny. Hold on. Let me see when I bought this. When did I get on the train? When did I get on the Edison train? Choo-choo. Let's see. Thomas Edison, baby. You guys know who Edison was? He wasn't a Kardashian. All the ladies out there. He's not a Kardashian. Thomas Edison. You may have heard of him. Famous American. Let's see. I only have $3,390 of Edison. I'm up 18%. And I bought it for the first time on 12/31 of 20. So let's find that. 12/21. No, 12/31. So the last trading day of the year. Come on, man. Right there. Right there. That's funny. Now, why do you think we were probably buying it there? Support, right? It had been here before. How many times? Shit, I don't know. It's one of the oldest traded stocks in the stock market. So if a guy bought it here, he's like, but Gerald, when I log into my account, it's a lot lower. Bought it for 78. Now it's 66. I'm underwater. I know. So I start buying some. Meaning, and you say, but Gerald, I started buying it at $86. Some guy did. And then it fell to here. And he's like, but I felt so bad. It was all the way to 59. I know. So this guy and this guy have the same story. Right? But this guy's story is a little different. Sorry, waiting on my pool guy. I'm being obnoxious there, but I'm trying to emphasize a point, and I hope you get it. What if Gerald got on the game here? Well, he probably would have bought a few shares here, then a few here, and then it ran up to here, and then what? Came down, I bought a few here, then what? Maybe a couple here. And you see over the time as we play this cycle, prices tend to go up. Now, this stock has been traded over 100 years. It's the oldest listed stock on the New York Stock Exchange. If you got in here with me and we got down here, you might be like, but my account is down. It's part of the cycle, and this is weekly. So that right there is like months, dude, months. It's like 6 months straight down. What about this? That's 4 months straight down, right? And then what? It runs up for what? A bunch of months. So if you had accumulated over the last 5, 6, 7 years and you want to take off 30, 40, 50 grand to go buy a house, would you rather sell into here or be the guy selling down here because he's panicked and now he's like dumping stocks? I knew I should have bought real estate back then. I watch this exchange all the time. I'm going to pull it out and go buy real estate, Gerald. Really? Why didn't you do it up here? You're doing it the wrong way. Now, I agree with the idea of pulling it out to buy real estate, but not because I'm a loser. I'm doing it because I'm a winner. You want to take advantage. The time to buy stocks is when people are selling them. The time to sell them to buy other shit is when it's going up, man. You get that exchange? And so you got to get on the side of that, man. And that ain't going to happen in a swing trade. Not big money. You might. But if you're so good at that, 3 transactions, you could be a billionaire. If you know for the next 3 are fucking winners for sure, that's how easy it is to get rich in the stock market. 3 in a row. Go all in, all in, all in. You'd make a fortune. I would. All in for $1 million. Leverage it. Leaps. Blah, blah, blah. Boom. All in on the triple. Put put $1 million. Double it. Then put $2 million in the next one. Triple it. Like 3 times, man. 3 trades. You're rich. Yeah, that's why I know they don't know shit. You know, bullshit. I can trade my way. I know I bear bullshit. 3 in a row, you'd be rich as fuck, man. So you obviously ain't as confident in your ability to pick then. Or you'd already done that. Well, trade, you got to put a position size. Exactly. The reason you're position size and the reason you're doing it in different sectors and the reason you have to protect your cap because you actually don't know. And so when you trade, you're playing the game. I don't actually know, but this is what a breakout looks like. And they say, well, it didn't keep going. No, there is no certainty. There's no certainty. And so look, if I'm looking at this and I'm trading, that's a stage 2 breakout, right? Price is closing above the 20-day moving average. Where would my target be for short-term traders? Somewhere right around in there. Well, when it starts to run, what about this day, Gerald? It closed below the 20. Yeah, but it's barely below where you started. So this point here, down here, would be where I would consider this move is done. You stay with the breakout until the next stage is broken, man. Because it can break, pull back a little, and then exactly what it did here. That is normal fucking movement. It's not going to be so simple as that it breaks the line, never looks back, just keeps rolling. No. Right? So that can happen, man. Just like you can have it tag, pull back, come back up. But look, it didn't break that area. Right back into a stage 4. It does the same on the way up as it on the way down. This is the exact same pattern. You say, what do you mean? You got to get this. This is Money Flow 2.0, man. Look, anchor point, right? That's a sell signal. Doesn't sell off, starts to go back up. But what? Doesn't break the anchor. It's too close, man. Then what? Comes right back down. I want to see a nice pullback if I think this thing's fairly valued. So someone asked me about Gush. Why aren't we getting back in Gush? Here's my problem. Look at oil. 71 RSI. It's gone straight up, right? Look at the XLE. 70 RSI. It's gone straight up. Gush is lagged. So if I look at this new breakout in Gush, now it might go. That's not what I'm seeing, right? What I see is the target is right here. That's not far enough for me. So this little turnaround here, I don't know, man. I got to wait and see. Fuck, I give it a minute. Oil's on a 70 RSI. All the oil stocks are on a 70 RSI. And there's a high right here. I got banged out here. I'm waiting. Yeah, there's room on here, but all the other assets in the sector are on extreme RSI. And I have investments in those. I don't have to push this. I'll wait. You could push it. I'm going to buy it anyway. Okay. I see higher return setups. What are we going to do? Go to there? All right. I see better setups, man. I could be wrong. It could run for sure. And I have a bunch of oil stocks. So good, run. Once you trade, like, so I'm in Exxon all the time. So because of that, I get to watch this pattern inside of oil. And I'm watching oil every day. Every day, where's Exxon? Because I can watch this. Well, if I get a nice big pullback, one way to play it is Exxon. One way to play it is buying call options. One way to play it, I could do condors or spreads or fucking whatever you want to do. You could do whatever, right? I could step in and just simply buy gush, put a stop, right? Let it come in. What? Play the game. So I'm trading. Target's previous high. I want to get in. I'm either going to get stopped out or make money. That's it. And I put in the rule and move on. If I get stopped out, oh well. You wait for the next one. It starts to break out, get back in. And you go, what if it stops me out again? Oh well. If it breaks out, you get back in. And what if that goes back and forth, back and forth? You go back and forth and back and forth. And if you don't like that process, then you expand out your window or change the asset you're trading within that complex, right? So if time is kicking your ass in options, why don't you trade something that doesn't have time? Time's not the problem, right? So you own shares. You don't get time doesn't hurt you. Time helps you, right? So you can begin to change it. So find what suits your time, your lifestyle. But this pattern will play out, man, whether you play on Monday or not. And they don't give a fuck when you got on the train. And a lot of people, their emotions are attached to their trading account based on when they got on the train. They actually think the fucking sun revolves around them. It doesn't. People ask me all the time, what do you think about housing prices? I think I want to buy properties that I can rent to people for a profit. What do you think about housing prices? You see how that is? I don't care. Because I can't know, man. I can't know. I can't let the possibility of something that hasn't happened keep me from playing the game that is playing today. Because what if they're wrong? What if the crash you're waiting on doesn't come? In 8 more fucking years, prices go higher and higher and higher and higher and higher. And then you have a little pullback. What then? You don't have 40 you don't have 70 stock. Like, you don't have all this built. You've been waiting. So no, man, I'll pay higher and then I'll pay lower and then I'll pay higher and I'll pay lower. But this game's going to play out, man. It's going to play out with or without you. Haynes Brands is going to open on Monday. It's 40% undervalued. What you do with it is up to you. You know, how does that fit inside of what you're doing? Might not. I opened with a lady sent me a letter. Said, I'm a single mom. I make $2,000 a month. I owe $17,000 on a car. I have $9,000 on $1,100 on a credit card that's in default. And I'm coming into $10,000. What should I invest in? Like yourself? If the last thing she should do is put money in the stock market. And some people would tell her that, oh, put your money in an index fund. She doesn't know what an index fund is, dude. She doesn't understand that the S&P 500 is made up of 500 companies. Inside of those 500 companies are 11 sectors. She doesn't understand the last 150 years of trading activity of the U.S. stock market. She doesn't understand that over time, stocks go higher. She doesn't understand that. She doesn't understand compound interest. Or everything she owns is a fucking debt going to zero that she pays interest on. She's so fucking upside down that a stock is not what she needs. She needs fucking life transformation to understand, to see how to value time, how to value money. Like, the last thing she needs is a fucking index fund. Right? I think, what good is that going to do? So she has 10 grand in index fund. She's still broke. She's still in debt. She still owes more than she has. She's still going down. So we're a long ways from investing. She's got to invest in herself, in the mindset. What keeps most people from being great traders is their mindset. Trading's made up of 5 things. Number 1, psychology. Number 2, market selection. If you're a waiter, why would you not buy restaurant stocks? You have insight. You know when it's busy and not busy. You understand Heinz ketchup. You understand Kraft. You understand Cisco Foods. You understand the trucks that deliver it to you. You got people that unload trucks, too stupid to know you can invest in trucks. Let me say it again. They unload trucks, too stupid to know you can invest in trucks. Now, they know about the Kardashians and fucking baseball. They know all kinds of dumb things. And every asset they own is going down. They own debts, not appreciating. They don't own companies. They don't own businesses. They don't own real estate. Everything they own is a debt that's going down. They will be broke. It is simple. That single mom is fucked. That's the answer. Until she sees that and begins to make a change between mindset, money, and fucking energy, and where my time is spent and what my mind is on, there's no formula. None of that's going to help her. None of that. You need 3 months. Like, you need to be told you need an emergency fund. Right? People know this instinctively. Squirrels do it. They store up shit. You ever see a squirrel? They beat a thing, go over, dig a hole, put it in there. What is that for? Eating later. They save and invest so much they can't even find it. I was watching a survey of a squirrel. This is a squirrel. Your brain's bigger than a squirrel's brain. Squirrels save 40% of the food that they find. 40%. You know how you get rich? You save 40 to 50% of your income. You say, well, I can't do that. That's why you're not rich. Solve that problem and you'll be rich. I don't care who you are. You could work at Walmart. If you invest 50% of your income, because very quickly you could buy all kinds of things, REITs, properties. You know, if you saved half your income, you know how long until you buy a house? What, 6 months, 7 months? Buy a house. Now what? You're getting $300 more a month and you own this asset that somebody else is paying off. And then you do it again and again and again and again and again. And your friend didn't do it. What happens to number 8 when you got $3,000 a month coming in and you don't need it? What happens when you get to number 10 and you're worth $2-3 million and all you've done is one fucking transaction 10 times? You were just a squirrel. Took your food, your money, the shit you saved, the time, your effort, your energy, your fucking talent in the workplace. When they gave you money, you said, I'm just going to fucking bury it right here. And that's symbolic of put it into a fund that's sacred, that you don't touch. And when you have enough to make that move, to buy that Uber, whatever, the Bitcoin, the house, you make that move with confidence. And guess what? If it rains, squirrel's still trying to bury 40%. And if a tornado comes, 40%. And if a wildfire comes, 40%. It's in his nature. It's in your nature. A while back, I created these things called 9 Thoughts on Getting Rich. The guy said to me, well, not everybody can get rich. Bullshit. That is nonsense. Not everybody can get rich, Gerald. Bullshit. I can show you 100 stocks they could have just put 10 grand in a decade ago and they'd be rich. So yes, theoretically, anybody can. Now, I don't know those 100. I get that. But to say not everybody can is nonsense. Everybody can. You can click a button. Everybody can. You know? Now, can a disabled kid? I don't know, man. But he could. If he saved 40%, his fucking family around him help him invest it. Why not? Yes, he could. 9 thoughts on getting rich. Number 1, getting rich is simple. It's just not easy. Not easy. Number 2, pick your blueprint. Your path. Might not be stocks. I brought a lot of people. If you get one thing from me, I think I say this in my book, don't I? Page 11 of the Money Flow. I recommend 2 books if you're a new trader. And then I say the above assignment could easily keep you busy for many months, if not years. This most likely is just a stepping stone in your financial journey. Ultimately, you may decide not to invest or trade stocks like me. If you get nothing from me other than a little bit of my enthusiasm for stocks, the stock market, real estate, and building wealth through the ownership of equities and property, I have completed my mission. I mean, you might not like the money flow. Good. Go somewhere else. Go somewhere else. Good. But then what? What do you do then? You know? What? You know what people don't like about me? As I point them back to themselves. As I say, it's your fault. It's you. You chose 18 what the fuck to do. You chose that. You chose to go there, date her, join that, sleep with him. You. You made that choice. And inside of you, you have everything you need. God has equipped you with everything. You already know your purpose. Your purpose is to serve people. Stop being selfish. They say, what's your purpose? I know your purpose. You were born to serve humanity, man. Everyone was. That's how God answers prayers. That's how he gets to people. Me to you, you to me. Oh, boy, I wish I could do this. Some guy shows up, you don't even fucking know, randomly. And there's your answer. See, he's not sending you money, man. He's sending you ideas. You're going to bump into people, but not con men. Not con men. It's not going to be a scam. I get people, did you DM me this? Does it look like I would DM you that? Did you fucking read what he said? Have I ever said I have some magic formula and that I'll manage it for you? Has that ever come out of my mouth? Ever? On 10,000 videos? No. So obviously the name is different. Fuck, man. Obviously. And I get 50 of those a day. Is this you? No. You already know that, man. If you spend 10 seconds looking. I wish your grandfather had done this. Wish your grandfather kept up with Hanes brands. That'd be awesome. Imagine your grandfather's doing this shit. He's like, man, I got to get in on this Hanes brand. Every time this thing is cheap, man, I got to get on this. What about up here? We want to sell it into that, man. Or trim it. What do you mean? Well, we want to buy a bunch down here. We want to trim into this kind of shit. But if it's just going to run, we let it run. And then when it comes down, what are we looking to do? Probably would have bought right there. Definitely in there. And now we've been buying in here. Why? It's going to previous high. Could, in theory, this come down? Absolutely. It'd be what? Around $11. What would I be looking to do? Well, I'm playing a 5 to 7 year cycle. This is 2011 to 2015. Before this, it had come down. That's a multi-year cycle, right? Then what? Comes down, right? 2016 to what? It's basically gone straight down, man. For how many years? 5 years. 5 years. If this corrects itself and runs back to where it was, what do you think happens to the 5 years of dividends on this stock? Now, there's people who tell you don't want to play that, man. You want to avoid all this. So you're going to get in over here and you're going to sell it over here and you're going to get out. And you're going to totally avoid all this and you're going to get all back in and come out. All right. If you can do that, do that. I find that very difficult. And as you build this out, this portfolio, yeah, you're going to have some they're going to start to go down. You're going to have to make a decision. What are you going to do with them? You remember when Coke went down for like 3-4 years? I say you cut it. Fuck Apple. Last time it did that 5 year down, I say get rid of it. People did. Tesla. That happens, man. And some of them are bad. Some of them you should have got rid of. But that is the risk of trading. That is the risk of trading. That's the risk of investing, period. You could buy a bad property. It's filled with bugs that fuck everything up. The neighborhood goes bad. Like, that's the risk of investing. And some houses go bad. That's why I advocate do not take an equity loan against your fucking home. You may buy a money pit, dude. You don't know what you're doing. You don't even have the money to do it. That's why you're borrowing against your home. What if you get it wrong? What if you buy a money pit? What if you buy and it's somebody fucking made meth in it, or there was a chemical spill, or the city water goes out it's just fuck, dude. Anything could happen. What if COVID and they stop paying you and then you lose your job because of COVID? Now you got a fucking equity loan plus your mortgage and no job and your renter stops paying. Oh, now a storm hits it and a tree falls on it. You're like, wow, that's a lot. Yeah, I've met a lot of people where a lot of bad shit happens to them. And so you as a king or queen of your castle have to protect your castle. You have an obligation to your home. You don't mortgage the castle to expand the land. You just fucking expand the land. Right? Guess what happened to kings in history that went to the church and shit and borrowed money? Hey, kingdom's broke. I need some money. They didn't keep it long. Right? So you want to borrow money for the expansion, not to keep your house. You don't want to borrow money to feed the troops. There's a difference. That's why I advocate against it, man. Philosophically. I get mathematically. I'm not stupid. I didn't acquire 17 properties as a fucking prison guard who mowed yards. Before that, it was in the army being stupid. The way I accumulated 17 properties is I just worked when other people didn't. And I acted like a squirrel and I saved money. And I took the money and I invested it in shit that paid me money. And I took that money and I started putting it in dividend stocks. Some went down. All right. Some went up. All right. And I just kept doing it, man. And as I was doing it, I'd study the charts and I'd look for bottoms and I could buy this bottom and that bottom and I'd just build it out and go forward, and bad things happen and you start new jobs and you quit your business and mindset. And along the way, you're feeding your mind, man. You have to convince yourself. You have to fucking brainwash yourself for stocks, man. If you don't believe this, it's because you didn't brainwash yourself. If you're still struggling with that, you didn't brainwash yourself. So you're out there playing with Bitcoin and you haven't brainwashed yourself. Well, I can't help you, man. You've got to commit. I've already decided that on that. Like, it's over. I get it. It's part of one of the things I own. If it goes to zero, it's going to really fucking hurt. And guess what? I'll get up the next day and keep doing this. And so I have stocks that if they went fucking zero, it would hurt. And I'd get up the next day and I'm still doing this. Whether it goes up or down. Let that sink in for a second. Whether it goes up or down, I'm going to play. I don't know if you're going to play next week. I don't know if the people that get scared out get back in. My experience is they don't. My experience is people waiting on shit never get it. That's my experience. I got friends that were waiting on the housing crash to happen again in 2010, 11 when I started buying a shitload of properties. I'd save up every penny I had. Guys, I only made 50 grand a year. My wife was a social worker. We didn't make much, like 80 grand. We got to pay taxes and save. You got kids and I'm just saving, fucking saving. And then I'd go do stuff on the side. And as soon as I got $16,000, $17,000, you know what we do? I don't go on vacation. I don't buy new furniture. I go buy a house. And then guess what? My passive income goes up $200 or $300. Well, I did that last year and the year before and the year before and the year before. Now when you add up that equity, I'm a millionaire. What did I do? I was a squirrel. And during that time, markets went up and markets came down and markets went up and market came down. And Exxon rode that the whole way. Guess what else rode it up and down, up and down? Edison. Now, I wasn't in this stock, but it's been playing the whole time. Could have paid me dividends. This thing's gone up and we could take it back. We could go back. Let's go back further. Fuck it. Let's go back 100 years. It's been around 100 years, right? Let's keep taking. Whoa, look way back here, man. 2006. This is $15 stock, man. Wow. Let's keep going. Wow. Look at 2000. Nice. It was $22 and it fell 1998. Do you think the stock market will ever come back, Gerald? There's no place like home. Do you think it'll ever come back? There's no place like home. It fell from $22 to $12. Do you think Roku will ever come back, Gerald? So, there's no place like home, Dorothy. 50% drop in this stock. Look at this. I don't know what was happening. I guess that was a fucking tech crash, right? All right, let's put in. Let's go to. Let's go to Pepsi. Where's the price? $25. Nice. What's the price of Palantir? $12. So if we're looking at this, now this is a monthly chart. I mean, it just looks to me. I don't know. Right? These are some big months down, baby. Now that price, it's 2008, fell to $30 from $50. Now, what if you just got in the stock market right here? Shit. Now, what if you got in over here? And it runs up. And it crashes down. It fell so far, it fell back to where you got in. Every one of you would fucking, everyone I know quits. This is literally, dude. Except for a handful of fucking hardcore friends I have. Everyone. This is where I lose every follower, every fucking subscriber, every Discord member. This is where you quit. Go fucking cry right here. And a whole bunch of people get really rich because they know this isn't sustainable. This is fear. This is the 2008 crash. And I had friends and family. They sold their stocks. You know why? Because I was way over here and I lost all my gains. And it came down. That's what they said to me. I lost some too. But along the way, what are we doing? Oh shit, I'm going to knock some out. What am I doing? I'm diversifying. What am I buying? I don't know, some shit for my business. 4 or 5 months ago, I pulled out and bought a beach condo, right, to rent on Airbnb. Why? As your wealth grows, you pull chunks off. This is years, guys. 2004, you're following the money flow. You're not just buying this stock. You're buying lots of stocks. And when they sell off, you're catching the stage ones. And you're doing this shit for years. And your portfolio grows, and then you bang some, pick it over here, you pick up this asset, right? And then what? This comes in, now what? Oh, shit, I can start putting a lot of that rent money to work. Plus, I'm buying some. And then what? It recovers way faster, right? Starts to come back. Now what? We're back to where we were. And all these people that got out over here, they're not. They missed all of this. They missed the chance to have compounded by buying cheaper, letting their dividends compound. Right? They feared out, man. This plays out, dude. Look, 2003 crash. We can keep it going. Let's go over here to the COVID crash. That one wasn't very long. You know, you think these are new? Oh, man. This is all old shit. Once we get our mind around that, that's why I don't like, let's put the single mom in the stock market. She doesn't understand what I just explained to you, man. So if we make this over to Bitcoin, if you don't get this, you're not going to stay in, guys. I mean, look at, you think Bitcoin will ever go back to its high, Gerald? Will it ever go to 50,000? So this is Bitcoin. And what do we see? Same game being played out. That's 7 months down. I knew I shouldn't have bought Bitcoin. I'm not buying Bitcoin. And then what? Sideways. And then what? Just goes up fucking crazy. Where do you think it's a good idea to sell some Bitcoin to buy a rental property, start a business, do something? I didn't say get out of Bitcoin. I said gather money you've made from Bitcoin. Do you sell it over here because it dropped, or do you sell it up here because it ran up? As a life philosophy, you sell into strength right here. But you can't get this unless you get this. So I need this. The only way I get Uber cheaper than $68 is it goes down. So if I could get it down into the 30s and we stay there for 6-7 months, I could fucking change my life, dude, if I'm right. You understand that, right? I could get 1,000 shares. So that 30 becomes 68,000. Fuck, that's another fucking Airbnb property for me. That's one stock, one trade. I got dozens of them. So if for a short period of time, I'm in good, man, if I could get you to understand this. So showing that mom how to do Bitcoin, it ain't going to help her if she doesn't get this. This ain't trading though, right? That's a different show, man. It's a different conversation. We can talk trading, but if we don't understand the big philosophy, I don't think you're going to be a good trader. Stage 1 breakout, right? Will it ever go back to the previous high? Look what happens. Now what? We only been down 3 months, man. In the life cycle of this game. Now, doesn't that look a lot like Edison right now? Let's put Southern Electric on here. Same thing's playing out, man. But it can't keep going. Okay, that's 1998. These utility stocks are getting expensive, huh? Man, I love you guys. All right. I'm going to let it go. I've shared enough. Hey, keep an eye on bonds, my friends. Bonds are setting up. Now look and see what I see. Do you see what I see? The only problem is the market has corrected and bonds have not gone up. So either there's a bigger correction coming or bonds are going to play catch up or they're just going to flounder. I mean, obviously they can do one of two things. But the pattern is set up, right, for them to go higher, starting to break out. I trade the TMF. But typically these go higher when the markets come down. That has not been the case recently. Check out Nike. Back up. Do you see what I see? Now, when I get new people who read my book, this is what you get hung up on. That's going to take time. I can't explain that to you in a fucking email. Bro, you got to see this is in a big fucking stage, okay? And then you also got to add fundamentals. Is this expensive here? Right? Is this a breakout or is this rolling over big picture, right? And we see it rolling over, right? And this is a gray area, and you got to be able to catch these and see when you're building a stage 3. And when the moving average starts to go sideways, you're going to see price above 20, below 20, above 20, below 20, above 20. And you got to be able to step back and say what's really happening is a stage 3. I can't teach that in one reading or a couple weeks trading stocks, man. You got to be able to start seeing these things. You have to have an eye for it. When you play music, you can improvise. Well, you fucking get better at it as you play more and more and more and more and more. Like, I play guitar, been messing around with this blues harp, and as you play more, you're able to improvise more. When you watch charts more, you're going to begin to see these stage 3s clearer more, right? And down we go. And some of them are just, they're false breakouts. It went to breakout, came back down. Now we're going back down to stage 4. But that doesn't change. This is a stage 1 happening. Has it ever stopped here before? Yes. Where's the histogram? We didn't get that going up. Everything's about to cross over. Is it fundamentally undervalued? Is there a target? Yeah, let's say 170. Is it undervalued? So this is very quickly how I'm looking at it. This is a trade, okay? NKE. $186, that's 30%. I really like trades to have 28%, close enough. I'd really like to see 30% or more rather than 10%. That just gives it room for juice. There's more players come involved. It's below the 200. Institutional players can come in, day traders, momentum players. There's enough meat on the bone to get it up there. If we're talking about there's 10% upside, I'm not as excited. Like, I'm more excited about this than Ford. This has more upside. I'm more excited about Hanesbrands and Exxon. Has more upside. Makes sense? More meat on the bone, man. Appreciate you guys. YouTube. What's going on YouTube? What about... I'll hang around with you guys for a minute. You guys are cooler than Instagram. Let's look at your dumb stocks. Let's see. A speculation play, keep your eye on, is I like mine better than yours. DS. We get back in this box up here. It's pretty bullish. Let's see. Wrap. Ugh. Now he talked about filling the gap. Oh. Hold on. I don't talk about this a lot. Here's the gap he's talking about. In charting, charts don't like to leave these. And on the way up, it'll 10. And this is why you'll see sometimes, I used to talk about this a lot. I haven't talked about it in a while. I'm pretty sure I do in my course. That I wouldn't make my profit target previous high if there's a gap. I would make the low. Look, again, now money flow 2.0. I don't try to dump too much on people at one time. It gets overwhelming. That gap changes the game. When this comes up and finally it's on a stage one, right? It dropped. It's now going sideways. Where's our apex point? Where's the lowest low? So we can start building this out. That is the lowest low. And where's our next high? Up here, right? And then here, and then here, and then here. No. Then here, and then here. And so as we begin to draw this out, right? We can draw it out. Stage 4, down. MACD's just turned. It's on extreme RSI. Now, what I don't like, this is the wrong type of stock for the environment we're in. Let's just say that it's fucking penny stock when penny stocks are getting crushed and nobody's covering this stock. No analysts. Am I on the right one? Oh, I'm sorry. I do apologize. I was downgraded 6 days ago and then reiterated 28 days ago. So we got a little conflict. I don't know, man. This looks hard, dude. I see what you're looking at. I think you're in the wrong market for this trade. I would like this trade when the stock market's in an uptrend. Fucking pressures to the downside. Now, we may have bottomed. I don't know, man. I'll let you have that one. I guess if I was using your money, I might do it. PayPal, yeah, no brainer. Stage one, stage one, stage one. We've had 3 of them. What's the target on PayPal? $249. It's way back here. Now, what if you bought PayPal higher than that? Should you get out? I don't think so. I think I try to trade at $249 and I would be profitable when we got to $249. You say, what do you mean? I wait for those stage, let it run up, hits a 70 RSI up here. I take some off, let it pull back. Meaning trade the money flow, man. Let me get my goddamn money back. So as it goes sideways, runs up, and the RSI bangs, I'll take some off, and then it'll start to come, and then it comes down, starts to go over. I'll start to put it back on. I don't give a shit I bought it up here. I'm going to trade my way into it. People don't know you can do that. Yeah, and guess what? You might trim something that you're underwater in. All right, we need money to put it into other stage ones to keep rolling that shit forward so that when we catch the move, we're buying those breakouts, we're buying those moves so that we can run it up, take some off, and keep doing it, man. And you run it forward. Plus, you're going to add new money if you're really trying to do something. I'm not fuck around and wait around. I want to keep adding money if I can. You know? I mean, yeah, I could hold one house, wait a whole bunch of years, do a burr, go get my money, come back, buy a house, wait a whole bunch. Or in the meantime, I go get more money, buy more houses, more money and more houses. And all of a sudden, I got a bunch of money coming in, and I take that money and go buy shit. Like, I could do that, or I could wait. So I'm not waiting. So if I have a dividend portfolio, I'm not waiting. I'm going to trim some shit. I'm going to be buying shit. So look at ETRN. Boom. Where did it stop? I've owned this stock for a minute. Now, I own 3 of them in this sector. The rest of the sector's doing bad. This stock got hammered. The court ruled against them. Could be up to a $2 billion loss. You think they'll survive? I think so. They're a business. We'll finance that debt. We'll fix that shit. They'll go forward. All right, so what do people think it's worth? ETRN. $11.20. Just got downgraded 5 days ago. 2 months ago, upgraded. So it's a controversial stock too. Pays a dividend. Now is when I'm going to look to be a buyer, when it's on sale, right? But it's not turned yet. I'm waiting. I need another day, man. So this week it's on my buy list. Even if I just buy a little. Why? 5-7 year cycle. Shit. I didn't sell into this because I didn't have enough. Next go around, I will. Which one did I have enough in? ET. I've been in that one a lot longer. Right? ET. See the pattern here? Look at that support, man, on ET. So as you're watching these, you got to decide which one you're adding to. I don't know your portfolio. I don't know what it looks like. You know? But we definitely like ET down here more than we like it up here, right? And then we got to check what do they think it's worth? Oh, shit. 42%, baby. I might give this a minute. See what happened? That RSI got extreme, and it's working it off now. Give it time. Let this come back in. Now, if you've never been in ET, is 40% enough to get you in? I think it would be. Now, what if you get in and it pulls back? That's normal. Remember, I was buying it here. So as it comes in, and we're taking advantage of what? Cycles, time, and the money flow, man. That right there. And you guys be good.